Hi folks, in this video I'm going to go through 10 stocks that I believe you can buy and hold forever. Basically, these are going to be some of the safest stocks that you can add to your portfolio. These are going to be long-term stocks that are stable and has ability to weather the storm and go through any type of volatility and market crash. I currently invest in all of these stocks and plan to buy even more. One of the criteria I look into is to make sure I can hold on to the stocks for a long time and able to get long-term growth through these stocks. I look at the competitive edge, or at least they should be industry leaders therein. I look at the stock that have value investing. Basically, they have good value currently and not just a bubble and not overpriced. I like stocks which pay out dividends, as it is an additional way you can make money, and with compound interest, if you reinvest those dividends, it'll grow your portfolio and make you more money long term. I believe the stocks that pay out dividends have a stronger balance sheet, as they are willing to pay back their shareholders as part of their earnings. Also, with dividend stock, you will have another source of passive income. By investing in the portfolio, you can earn regular income through the form of dividends. This way you have your money working for you. There are a lot of stocks which pay dividends, but the ones I'm going to talk about have good financials and the safety scores on their dividends are extremely high. So without further ado, let's talk about the number 10 stock on my list. Apart from the iPhones, they have a wide range of products like the MacBook, iPads, Apple Watch, AirPods, etc. The best thing I like about this company is its competitive edge. They are the market leaders in their sector. Basically, once you buy their product, you will never want to stop using it or switch to other brands. Their products are built with high quality and are simple to use. Apple has very strong earnings. They have been growing at a consistent pace for the last decade. It started paying out dividends in the last 10 years or so and pays out a decent dividend, not as much as the other dividend stocks on this list. The greatest investor of all time, Warren Buffett, has around 30% invested in this stock in his portfolio. The company has been growing at a rapid pace with a steady dividend payout. Apple has enough cash flow to weather the storm of any type of recession. Considering all these factors, I chose this stock to be the top 10 in my dividend portfolio. Number 9 on the list is Realty Income. The monthly dividend company is an S&P 500 company. Realty Income is a real estate investment trust or REIT. The monthly dividend is supported by the cash flow from over 6,500 real estate properties owned under long-term lease agreement with commercial tenants. Some of its tenants include Walgreens, FedEx, and Walmart. The company has a market cap of $21.4 billion and generates $1.3 billion in annual revenue. Its annual dividend is $2.80 and the dividend yield is 4.52%. Realty Income is a well-known dividend stock because of its compelling track record of dividend growth. The other reason I like this stock is because it is a REIT, and it is required by law to pay out at least 90% of its income as dividends. Isn't that sweet? Additionally, Realty Income is one of the few companies that pays a monthly dividend, which allows shareholders to compound dividends at a faster rate. Number 8 on the list is company which owns the world's largest chain of coffee houses, Starbucks. Its market cap is $91.6 billion. The dividend yield is at 2.1% and annual dividend is at $1.64. With more than 32,000 physical locations and its operations in approximately 82 markets around the world, it's a truly global brand. Its brands include Starbucks, Tazo Tea, and Frappuccino. Starbucks is constantly improving its product offerings and has developed incredible brand loyalty among its customers. Although Starbucks is going through a tough spell now, as majority of Starbucks locations were shut due to the pandemic. With its strong brand, clean balance sheet, and robust mobile ordering and payment platform, Starbucks will endure the pandemic better than other restaurant chains. Number 7 on the list is Kimberly-Clark. Kimberly-Clark is a leading manufacturer of personal care and tissue products. It is headquartered in Dallas, Texas, and has strong global brands, including $5 billion brands Huggies, Kleenex, Kotex, Cottonelle, and Scott. Its products are used by 1/4 of world's population and are sold in more than 175 countries. The firm also operates KC Professional, which partners with businesses to provide safety and sanitary products for the workplace. Kimberly-Clark's growth initiatives include improving its core businesses in developed markets, accelerating sales of personal care products in emerging markets, and improving its e-commerce business. Kimberly-Clark stock pays a dividend yield of 2.72%, which is one of the highest among large-cap consumer staple companies. Its payout ratio is 21.14% and pays an annual dividend of $4.28. The recent dividend increase represents the 48th consecutive annual increase in the Kimberly-Clark stock dividend, making it a dividend aristocrat and a dividend champion, and set to be a dividend king in a couple of years. Number 6 on the list, with a market cap of $203 billion and with a dividend yield of 3.6%. Coca-Cola is the world's largest non-alcoholic company and one of the biggest blue-chip companies in the world. It has long been known for quenching customers' thirst, but it's equally effective at quenching investors' thirst for income. The company has paid a quarterly dividend since 1920, and that dividend has increased annually for the past 57 years, making them a dividend king. Coca-Cola for decades has faced intense competition from PepsiCo, but while PepsiCo has expanded in snack food market, Coca-Cola has struck to beverages. That hasn't stopped Coca-Cola from diversifying away from its traditional drink. The company has made several acquisitions like the UK-based coffee house chain, Costa Coffee, and a minority stake in Monster energy drink to expand into all corners of the beverage market, especially as soda consumption has declined in recent decades. Bottled water and energy drinks have been key drivers of new growth, along with products for expanding ranks of health-conscious consumers. Another reason to own Coca-Cola stock is that Coke is Warren Buffett's favorite stock. Berkshire Hathaway owns about 10% of Coca-Cola. Number 5 on the list of dividend stocks to buy and hold forever is Procter Gamble. Its market cap is $341.7 billion. Dividend yield is at 2.32% and pays an annual dividend of $3.16 per share. It is highly diversified and a global company with products in 180 plus countries and leading brands like Pampers, Charmin, Downy, Tide, Febreze, Cascade, Dawn, Head & Shoulders, Old Spice, Pantene, Gillette, Braun, Crest, Oral-B, and the list goes on and on and on. We need these products to live, no matter how the market behaves. With 66 consecutive years of dividend growth, P&G is a dividend king. Number 4 on the list is 3M. 3M is not just a post-it company. It is a highly diversified company with 5 main business segments that cover over 45 technology platforms, ranging from adhesives and abrasives to ceramics and nanotechnology. It has many different industries, from healthcare to manufacturing to energy and aerospace. 3M pays an annual dividend of $5.88 per share and a dividend yield of 3.64%. with a payout ratio of 64.62%. 3M has paid uninterrupted dividends for over 100 years and raised its annual payout for 62 consecutive years, making it a dividend king. Number 3 on my list of buy and hold dividend stocks forever is McDonald's. With market cap of $157 billion, dividend yield at 2.36%, and annual dividend at $5 per share. McDonald's is the world's largest quick-serve restaurant chain, with nearly 40,000 locations in more than 100 countries. Almost all of its restaurants are franchised, meaning the stores are owned and operated by independent business owners. Under a typical franchisee arrangement, McDonald's owns or leases the property while the franchisee pays for equipment, sign, seating, and decor. McDonald's is highly globalized, with only 36% of sales generated from its US restaurants. The other 64% of sales is derived from a mix of mature, developing, and fast-growing international markets. The world's largest hamburger chain also happens to be a dividend stalwart. With 44 consecutive years of dividend increases under its belt, McDonald's is slated to become a dividend king in 2024. Number 2 on this list is another global beverage company that generates $67 billion in annual sales, with a dividend yield of 3% and an annual dividend of $4.09 per share. Yes, I'm talking about Pepsi. One of the major things that sets them apart for me over Coke is their product diversification and also their revenue. Their revenue by far exceeds Coke. I think it's because they dabbled in the snacks market as well. Pepsi's payout ratio of 76.32% is on a higher side, but that's okay. I think it is still pretty good. With 48 years of dividend growth, it's 2 years away from being a dividend king. Their beverage lineup is awesome. It has Gatorade, Lipton iced teas, Naked Brand, Starbucks ready-to-drink coffee drinks, Tropicana, the list goes on and on. If you look at their food, Lay's, Doritos, Ruffles, the pita chips, the Sabre hummus, Cheetos, Tostitos, Fritos, the list is extensive, which gives them an upper hand. While the food and beverage industry's growth challenges will be something that Pepsi must address, Pepsi appears to remain a dependable long-term dividend growth stock for conservative income growth portfolios. When it comes to buy and hold forever dividend growth stocks, they don't get much better than Johnson & Johnson. Thanks to its secure payout, outstanding dividend growth track record, unbeatable balance sheet, recession-resistant products, and solid long-term growth runway, Johnson & Johnson is one of the most trusted brands in the world. It is one of the most consistent earning growers in history. Johnson & Johnson's dividend has been paid since 1963 and increased for 58 consecutive years, qualifying the company as a dividend king, dividend aristocrat, and a dividend champion. The company operates in several different segments of the healthcare industry. In addition to pharmaceuticals, it makes over-the-counter consumer products such as Band-Aids and Listerine. It also manufactures medical devices used in surgery. Johnson & Johnson seems most appropriate for dividend investors looking for a very safe income from a stock that will almost certainly let them sleep well at night. The company's scale, product breadth, cash flow, and geographic diversification seem likely to keep the firm relevant for decades to come. In my opinion, it can be a core holding for any good dividend growth stock portfolio, as it is for mine.